Good morning to all traders and welcome to another Marketing Waves video. Stavros Tousios here, and today we have yet another Elliott Wave update for you, and we're going to analyze 5 different assets. I think it's quite necessary that we keep tracking, daily, I would say the DXY for the moment, so that we are able to identify signs or any sort of indications early in the game, because most of the assets obviously are going to really depend on what's going on against the dollar, pretty much, right? So with that said, in today's video, guys, we're going to have a quick look on the DXY, the dollar against the yen, oil, gold, as well as NASDAQ. As it looks like tech and also growth stocks are pushing the index to fresh highs, have actually pushed the index to fresh all-time highs, while the S&P and the Dow Jones pretty much lag. Is this going to continue? We're going to find out fairly soon. Now, on the DXY, guys, if you remember yesterday, we talked about the invalidation at wave 1, right? We talked about prices actually getting up there. It looks like, and look at this, we came exactly off of that level, yeah, at 92. So for now, we're not yet invalidated. But, yes, and there's always a but. It looks like we're going to get the invalidation fairly soon, because I expect the DXY to move a bit higher given the correction down here. And I call it correction because it looks corrective. So I think we're going to get another leg up. Now, it might be a double top and then we move all the way down, you know, assuming this is going to continue in a bearish impulse fashion. But I have my doubts about this, okay? Which means I am bringing in a new main scenario to take into account this invalidation, okay? Should we get, of course, the invalidation signal we expect. I'm turning this into an A, B, and C. This would be an ending diagonal, and this is, of course, wave A and wave B, which means down here we have wave X in the intermediate degree, and very likely we're going to get a wave Z up here for the completion of wave 4. And from there, look for price to start moving lower down again. You might say, why are we not going back to wave 3 and then down there? Well, it's purely because for now, there are no signs, guys, that this is really, you know, the impulse that we expect to see a huge reversal that's going to break above the 4, which means, you know, the primary degree move to the downside is finished. That's the cycle done, the primary degree cycle, right? Which means we expect a huge move to the upside for the US index. And I do not expect that currently. It's also because I don't see the signs, okay? For now, at least, this to me is not really a good sign to start a reversal, okay? The impulse, of course, is great, but that's due to the FOMC, but I don't see this as a wave to start a reversal move. Okay, so that's the reason I'm going for this as a main. So as I said, ABC, X, and we're going to get another move to the upside for wave Z. Okay, and that is going to be where our wave 4 is going to end. So I expect more upside, but I really need to see the break in the invalidation of this level 92. It's probably now just you know, this is a first attempt just to, and the continuation down just to make a few people think that this is done, you know, and we don't need to worry about more upside. But I am worried about more upside, so that means I expect the invalidation of this level fairly soon, okay? Perhaps even today. We did get to that level as we called over the past few days, yeah? And I wouldn't be surprised now. That looks like A, right? W, X, and Y. That's going to be like an ABC, but you know, it's possible that we might extend a bit higher, maybe to 92 or so. We might get then a deep correction, okay, and then a continuation up. or it could be a case, guys, where since this is an ABC, this is ABC, 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 we'll get an ABC, and then we'll get another ABC, and that will be some sort of ending diagonal that would come lower down, but then there's no interaction with that wave, so it would be most likely an open diagonal. Okay, but I think we are going here for the long shot, so let's just not worry about that. Let's worry about now that the fact that, you know, the most critical expectation now is whether we'll get this invalidation or not. Okay, with more upside expected to go to the previous high, 93.40, even higher, depending on the actual structure. Now on dollar yen, dollar yen has been quite tricky, right? It's been so many times that I was strict thinking, okay, that looks impulsive, yeah. So here I was strict thinking that, okay, we're going to continue lower down. Didn't happen. It didn't happen, and then we got that move. Okay, to me that is an ending diagonal, but also, guys, due to where this ended, I've changed this. That was a W, X, and Y, if you remember, and I was looking W, X, Y, and then Z up here. But due to this sort of structure that looks quite, I wouldn't say symmetrical, but I will just say skewed. This is to me like looks like a skewed triangle. Okay. Oops, I think I deleted something that I shouldn't. No, okay. Well, it is a triangle, guys, okay? A, B, C, D, and E. To me, it looks also like it's ended with an overthrow, okay? And now I see a very nice impulse to the downside. Wave 3 is done. We are now either correcting in 4 or we're gonna get a wave 5 in. Then we're gonna get correction 2, 3, 4, 5. That will be A, then B and C, and finally, we're going to reach the destination that we've been expecting to reach for a while, which is at least the previous low at 107.44. Okay, I mean, might be a bit off, shy of that, might be a break under as well. We don't know. We are going, of course, to monitor, and when it comes closer to that time, we will have more data over here, and so it will be easier for us to project where we could be getting towards. Which level, right? So for now, that remains a W, X, and Y for me. Don't forget that we've also talked about an alternative scenario, okay? That this move ended down here in W. This is my wave 4 instead, right? There is no W, X, and Y, obviously. And that could like turn into, you know, some sort of leading diagonal would look like, okay? But I would probably just place my wave A over here just to make sure that that's 1, 2, 3, 4, and 5, to make sure that this is also a 5, 1, 2, 3, 4, 5, yeah. And then that would be, again, the expanded flat, and that would be like an ending diagonal in the 5th wave of this leading diagonal, which means, again, we expect to move lower down, yeah, and we can get down to, well, 108.70, 109.20, or any of those levels. Should we see a signal to the upside here and then a break of this level, yeah, it would most likely mean that our wave 4 was done down here. But this scenario's invalidation, the alternative one, will be at 108.27, okay? Actually, hold on. That would be the 1 over here, and that would be the 2. It would be the 108.51, okay? Now, let's go quickly on oil. I didn't know which ones to pick, guys. They're all very interesting. So I left euro out because I'm doing gold. I left euro out because gold is in a much better position to give us something rather than euro dollar. Euro dollar looks a little bit more bearish as well. So on oil now, we talked about the move to the downside finally starting, okay? I've got 1, 2, 3, and 4 for now, and that's a clear impulse that is, for now at least, that is likely to continue lower down. We did the 1618 of 1 and 2, so it's very possible that our wave 5 is going to end anywhere between 69.60 and 67.90. Okay, anyway, I think the 200 at 69 or so makes a good level as well. And from there, I will be expecting a correction up in 70 or even above 70, and a continuation further down for this correction to find a bottom at 65.90 or even at 63.97, which is going to also give us a rejection at the bottom channel. Of course, that is an attractive sort of level to take into account when we are doing our analysis, right? Now, it might be a case also, guys, that we're going to get a double bottom here between 4 and 2. So it could be like this is a W, we're going to get an X, and then we're going to get a Y. Or it could also be an ABC. That is going to be determined on whether we are going to break, above wave 1 currently before we break a new low, right? So if we break above 71.34, that's very likely that is going to be a WX and Y instead, unless if that break comes back in and becomes either a flat or a triangle, okay? Because what we care about is where wave 4 ends, guys, okay? Not whether there is an actual penetration, because wave 4 has to penetrate. So the end of wave 4 is what matters for the invalidation. In any way, surprise I won't be if that goes down and then continues all the way up, meaning that this could be wave 1, and then we're going to get wave 2, yeah, and then 3, 4, and 5 to have one up here, okay? So that would be like another variation of the main scenario, meaning that we're not doing wave 2, we are doing a minute correction here. That's my 1, that's my 2, and then 3, 4, and 5. Could even be an ending diagonal, who knows. We're going to obviously increase the probabilities of that happening if we break, first above the 72.30, and secondly the previous high. And don't forget also, talking about the possibility of this is the alternative scenario. Our wave 1 has ended up here. That is 1, 2, 3, 4, and 5. There is no continuation up once we get wave 2, which means it's going to be 1, 2, 3, 4, 5 for A, and then B and C down for fresh lows below even the 57. Okay, that is the alternative, though, nothing to do with the main scenario, guys. Okay, gold quickly, as I said, it's a bit more interesting than euro dollar because it's not as bearish. Currently, at least. So, and the other thing is that we really hang on that line, guys. On the index, we did the rejection at the invalidation level. On gold, we are far from it, but very close. So we are now at a critical zone, I would say, where gold participants are going to decide or show us whether we're going to get a bit more bullish or we're going to get a bit more bearish. If we move back above the channel, that is going to be a good indication for the bulls. Perhaps, though, we might get a rejection at the median line or at the top of the channel, okay? So pay attention to these levels. Should we remain outside this band, this zone, okay, the channel, it's very possible that we're going to head down there. This is our validation level. If we hold, very possible that we'll move up. If we don't hold, then this will be invalidated. Okay, that would be our invalidation level, which means that this can be an ABC over here, guys. So I'll wait for we get down here. Perhaps we can get a new low below the 1675 as well. So we really need the 1755 to hold to support a bullish view. Otherwise, we remain in that corrective leg that we've been, for a while now. That top is, what is our top over here? Let's have a quick look. That is that August of 2020. Wow, it's been that. I thought it would be like February, but guys, time flies. So let me actually just check something now because I see those lines popping up over here, and I want to extend the right line and see where we are exactly right now. Okay, as you can see, we've done a false break, okay, for now at least. It could be some sort of, confirmation. Usually we'll get it here at the rejection that resistance becomes a support, but sometimes we get back within it. If we remain within this sort of area, guys, it's very possible that we will continue higher. Okay, so that's the alternative. So really focus now on the short term. The short term is giving us good signals. And on NASDAQ, guys, it's been a few weeks we talked about NASDAQ, but you well know that I've been expecting an ending diagonal and a move to the upside over here. And it looks like it's coming to, well, it's coming to an end. I've just gone a bit further out on the two. Actually, you know what, let's just go out on the 4 hours just to get a better perspective. If you recall, we're looking at cycle 4, 1, 2, 3, 4, and it looks like to me, my wave 5, it's an ending diagonal. So, and that comes to reaching that trend line fairly soon, a little bit further up, maybe 1, 2, 3%, who knows, 5% might get that as well. But to anything above, it will be considered an overthrow, right? So it really matters how long, how big that range is, because we cannot really extend much higher than the previous, than the trend line and still consider an overthrow, right? So we'll have to go with the range that we are exceeding over here to understand whether this is an ending diagonal or not. Now the thing is this, that we get a good signal on the MACD on the 4 hour, and also on the RSI it's a tiny, but on the MACD is a very nice signal, guys. Okay, you can see that even on the 4 hour and on the 1 hour we get something. So the question is this such a big signal that we can really consider that this is the end of the cycle and then we'll continue lower down? Well, it's a start. It's a start. Well, and then I'm showing you this, the 7K, and you know, that's from last March, guys. Okay, so from last March, we're 6.6. We did more than a duplication here on NASDAQ. So you can understand what this means for technology and growth stocks, right? I mean, what that means, it means that we are looking at an indicator of economic growth, okay? And expectations of economic growth following the recession, of course. But we're still in a recession pretty much, but you know, we're not out yet, but it looks like the stocks are showing that, you know, there is economic growth and is going to continue. But I think it's time where, you know, we'll have to start thinking about that, you know, these expectations might change. If we also take into account the last shift from the Fed as well, might be very possible. Now, the alternative scenario, guys, here is if we break above that level and we are actually going even above the 1416 hours, so it will be considered a huge overthrow, and most likely it's going to be a case where this is wave 1 and 2, yeah, and this is like the beginning of some sort of leading diagonal or so for wave 1 in the minor degree. So, and then we're going to continue up for 3, 4, 5 in intermediate 3. Then we're going to get the 4 and the 5 for primary 1 or something like this. Or actually, I think might be a big of a long shot. Most likely, this is primary 1 for the alternative. That might be like a running flat here. Yeah. So it actually looks like a nice running flat as I say that now. And then in that case, guys, this is going to be our wave 1, then 2, 3, 4, and 5, and we'll continue all the way up. Okay, that is the alternative for me. So either ending diagonal or multi-structure move to the upside with that move, with that being wave 1 and that being wave 2. And that will be all for the day, guys. It's Friday. Expect some moves. I am expecting some moves. Enjoy the last trading session of the week, and you know, have a nice weekend. And we'll be again here together on Tuesday.